All right. Hello, everyone, again. It's been about a year since I did my last spreadsheet update, but given the market conditions, we're having a huge market correction with regards to tech, SPACs, just high PE ratio stocks that are coming down, stocks that don't have good earnings, stocks that don't have a lot of cash. They are getting hit hard, as well as companies that tend to have high growth and borrow a lot of money for that growth. They're being affected by these fears of rate hikes affecting their bottom lines going into 2022. We also had a massive recovery in 2021 following the coronavirus, basically an economic recession, but it was kind of kicked down the road. The can was kicked down the road due to like $2 trillion being printed and the Federal Reserve buying up corporate bonds and stuff like that. So, without any further ado, let's go ahead and take a look. So I'm still using this spreadsheet, Scorpius Terminal. It's available on my website with a free basic version if you would like to try that. But I've added a 10-year T yield chart, and I still have a volatility chart that tracks the VIX. As you can see, it looks like the peak of volatility came a couple days ago, about 3 days ago. Well, 3 market days ago. I was executing some buy orders last week on, buying the dip for companies like Apple, General Motors, Google, and a couple others. So as you can see over here, we're down near a relative strength index with the S&P 500, right near 30, which is just above oversold territory, which means we may be starting to come back. We're also only 1% above the 200-day moving average. So from here, if there's going to be a move lower, then we would really be in a bear market territory. Right now, we're not really in a bull market or a bear market territory. We're in kind of a potential recovery from this correction. And then, as you can see, sectors, about 30% of sectors that I have here are above the 200-day moving average, and 13% are above the 50-day moving average. Both of those numbers were at about 10% a few days ago. So we are seeing the indexes and the sectors kind of moving back in the upwards direction. My analysis of this is that we became very oversold over the last week, the last 2 weeks, even the last couple months, eventually hitting an RSI of somewhere around 10 for the S&P 500, which is ridiculously low. That is usually not sustainable at all. Unless we're absolutely going to have a full-on market crash, which I don't really think is in the cards with a couple of rate hikes. That said, you want to be in stronger companies. You don't want to be in weak companies. If we go over to our stocks tab again, a lot of this information. If you're confused about how any of this works, please refer to my earlier videos that talk about what all these columns are for. But basically, we're seeing a lot of stronger companies below both moving averages, which is relatively unusual for Google. Looking at Microsoft is still below the 50-day, but it recently had a spike in its price a little bit back up towards it's that price of 327, and it was even higher before that. And then Amazon back up to 2,900, but still below the 50 and 200-day moving averages. Tesla's still below its 50-day. Oracle still below both. And then, you've got some more down here. But if you look at a lot of these weaker companies, and by that you're talking about Beyond Meat, they're negative $2 per share for earnings. Twitter, they're very much below their 50 and 200-day moving averages. And the market has kind of punished those companies that don't have good earnings, don't have a lot of cash on hand, and will definitely, their bottom lines will be more affected by the rate hikes that are expected to be taking place throughout 2022. Look at Facebook is below both its moving averages. Companies like Nvidia, AMD, the semiconductors got hit pretty hard. AMD is starting to bounce back after hitting almost close to $100 a share. I think it spent a little time maybe at 99, but now it's starting to come back up. And we still have the semiconductor shortage happening. So moving forward, those parts are still going to be very much in demand, especially after various governments have contributed money to making sure that there's capital injection to build manufacturing centers and to get out of this shortage, because it's starting to affect areas like defense, missile technology, things like that that really do require those semiconductors to be used. We go over to the news tab. This one was interesting a few weeks ago, kind of right as things were turning for the worst and the market was about to correct. I had a 90% bearish sentiment, 90 to 10% basically ratio. And like, I've never seen that before. And so sometimes those unusual things that you can see with this spreadsheet can kind of give you a little bit of a tip off, like, oh, that's not normal. I haven't seen that. And that comes from checking this kind of like every day, getting used to how all of this is put together and what the analysis actually gives you. So right now we're at 75% bullish, 25% bearish. That's basically right in between where I have my overconfident and fearful criteria as far as trying to get a bead on where the news is as far as market sentiment goes. If we go over to cyclical, this just basically calculates RSI, but you can kind of see the price movement over the last 60 business days with the market. Again, it kind of like high up near like 470-ish, right before really taking a dump all the way down to 437. And now we're sitting at 441. So the recovery may be beginning. Again, no promises. We never really know what's going to happen or what the Federal Reserve is going to say on the next news conference that's going to scare people in the market. And then here's the sector tab. So again, this was like this ratio here, the over moving average ratio was 10% for both. So some of these are starting to recover. Oil and energy, they never really fell below. I don't think they've been doing very well during this tough time for the tech stocks and the high growth stocks. Some of the most beaten down sectors are the ARC, anything in the ARC ETFs, which very like forward edge, front leaning, biotech, innovation, autonomous vehicle technology, next gen web, fintech, 3D printing, all those things that are kind of very new, very budding, mostly relying on capital injection, not so much generating a lot of revenue, mostly companies that are losing money. Those have been hit the worst as far as entire like sectors or groups of stock, tranches of stock. You could get further into whether or not Kathy Wood is really, making smart decisions with her ETFs. No idea why DraftKings is in the ARK Innovation ETF, but, you know. And then, again, as you can see, things like biotech, you know, real estate, etc. A lot of things are below their moving averages, to include the NASDAQ and the Russell are still technically in bear market territory. So I like this. I like to use this spreadsheet because it gives me the numbers. It doesn't give me a lot of hype from the news. It doesn't give me a lot of sentiment one way or the other. I've even broken down the news into a number. And that's the entire goal here, is to try to stay realistic. One trade that I have put in on is I've got a call on SVXY, which is to inverse volatility. So we're coming back down, possibly. Again, no guarantees. But volatility is on its way back down after spiking above 30, which it can't very well do for very long. So I have a call for SVXY to hit 60. I think it's in the low 50s right now. But it has been trending upwards as volatility decreases. So that's one trade that I like to do, trying to get better at the volatility trades. But as always, it's a work in progress. Again, please like and subscribe the video if you enjoy the content. If you really want the spreadsheet, we do have it available on our website, mantleenterprises.sellfi.store. We'll have the link below the video. Thank you very much. Please feel free to comment with any suggestions, or if you see something we can improve on. We are always open to that. So thank you very much. Happy hunting. Hope you make money in the market. And Have a good one.